coming over here to part 2 of today's video breakdown and going back to what Nadine said at the very onset of today's call.
And yesterday, just because there's a little conference here going on, we did issue and made our dates public. So for anybody wondering if this tokenization thing is real, I assure you it is. So July 13th, and a very precise date, we are—
Wait, July 13th of
2026.
2026, y'all. This is like an intra-year thing.
That's right.
This year.
It's happening this year. We're going to start tokenizing. We're going to do a soft launch because it's really important to assess the state of readiness of the industry. We also have set up some working groups where a lot of our participants and their partners can participate. That was very eloquent for me, participants and their but it's really important so we can make sure we're all ready for the big launch come October. So it is here, it's real, it's moving forward. We have a lot of people lined up to work with us to start tokenizing their assets and starting to leverage and execute on their digital strategies, which is, after, I don't know, talking about this for 10 years now, it's really, really cool to say we've arrived. So
how this is happening, it's going to be fully live in 2026, this year. And the reason why I constantly hint at Canton is because, yes, we have other logos in the background, but they specifically continuously mention Canton. Now, what I do want to show you guys today is that the DTCC confirms on stage that this is going to be a multi-rail ecosystem. We have to understand that all the competition that retail is formulating in their head because of speculation and because of tribalism on the internet is an illusion. We're about to head into a multi-chain, multi-rail ecosystem, and there are going to be multiple winners. Don't take that from me. Listen to Nadine say that directly on stage at the Solana Accelerate conference, where she's now sitting at a Solana conference talking about Canton, but also confirming that yes, Canton was the first one, but it's not the last one, and it's not the only one that they're paying attention to, the only blockchain that they're looking at. Take a second and listen.
Moving to this new infrastructure, you think about the variety of blockchains that are available. How do you, sort of think about like what are the parameters? How do you assess the different blockchains that you're thinking about being able to put all of your tokenization on?
It's a great question, Christine. It's again, we're the people that brought T+1 to the market, right? So treasury clearing. So we're well honed into managing very complex projects in a way where you've got to still drive the car and change the wheels as you're going, right? So we do that extremely well. And when we looked at our technology ecosystem, it's multi-layered. One, to your point, it's a multi-chain setup. We've been public with Canton, but there's many more that we're looking at. And there's a methodology that we have to go through that. And you've outlined some of the criteria that we look at. We need to look at compliance. We need to look at client demand. Where's the liquidity? We need to look at security, scalability, how transparent, how distributed is it, right? And it's not a one and done. We do that, and then we have to constantly monitor. And part of our requirements, we're a G-SIFI, I think you called me a double G-SIFI. So making sure that our regulators are comfortable that we've got the right controls in place and the right oversight is really important. So that's how we do it. And it's not one person that says, yeah, I want to do that. But usually a client will come in or multiple clients will come in and say, we're interested in Canton, we're interested in Solana. And then we'll start our analysis and we'll start looking at it and then we'll hook it up and off we go.
And then when you think about like scalability, like how do you sort of measure that, or how are you like?
Well, you uttered the stats originally, right? It's for us, just think of when we do corporate actions at the rate of some of the processing that we're seeing on some of the rates. It could take us days to process a corporate action if we don't have that scalability to do that. So 4 quadrillion is a lot of settlements that go in. This is without counting all our corporate actions that we process, all the repos that move through the pipes. So we need scalability here on the chains, and Solana is one of the more scalable chains that are out there, but it's still not enough. And our teams are working with.
Okay, boom. So she literally just confirmed and ixnayed everybody's tribalism that this is going to be a multi-chain ecosystem. There's going to be many survivors. They're going to have to pick multiple networks. She just said that Solana is definitely a scalable network, but it's not enough for $4 quadrillion. So it's going to be a multi-chain world. This is literally going to be the ride of a lifetime over the coming years ahead as we start to see truly which chains, which networks are going to be chosen. And we already know that Canton is one of them, which is why I focus so heavily on it. I'm not a naysayer that say that XRPL or Stellar or Solana or Ethereum aren't going to be chosen or whatever. I just go off of the facts. And right now, the facts are is that Canton is one of the chosen ones. Now, I do believe that there are going to be many other networks that are chosen, XRPL, Stellar, Hedera, so on and so forth. The list goes on, Quant, XDC, so, and probably maybe even some others that we don't know about or that we haven't heard of yet. And so we have to be able to adapt and change to this ever evolving ecosystem. And the data is in. The data is in. She's now mentioned Canton multiple times. And so taking that literally, as she goes on to say, this is happening on Canton now, right? And many other blockchains later on is a phenomenal thing. So there should be no tribalism, right? There should be no tribalism. We should take that as, wow, diversification is key, right? That's the way that I hear that. At least when she says something like that, I'm like, yeah, I'm happy that I'm diversified, right? Which leads me over to this. Stephen McClurg from Canary Capital confirms financial institutions and wealth managers are focusing on real world use case. And we are transitioning from a hype cycle into a utility cycle. The wave of institutional capital is coming. And I firmly believe that Hedera Hashgraph is going to be a part of that wave. So listen to what this gentleman here from Canary Capital says.
Like if you think about constructing a portfolio and you're going to make an allocation to a crypto ETF, what is it replacing? Is it replacing like the tech ETFs, the triple Qs, or what have you seen?
Well, and our inflows and our focus is even different from 21 shares, even though it's a little bit different. We play to our strengths, and most of our team came from institutional backgrounds, and we talked to a lot of insurance companies, pension funds, sovereign wealth funds, and then we also focus on retail quite a bit as well. There's other competitors that focus very heavily on financial advisors, which isn't somewhere where we focus, but we still get inflows from. So what we are seeing is more, for us, it's more institutional, including corporations. So what's really interesting about what they're looking for, it's a little bit different. If you kind of go back, the history of crypto, it's been very largely retail driven. The Bitcoin ETF brought in a lot of financial advisors, but now you have institutional investors that are focused on which blockchains have great functionality. And I remember when we first filed for the Hbar ETF as an example, Bloomberg and some other places are like, well, what's that? What's Hbar? And one of the reasons why we filed for it was the technology stack and the partnerships that the Hedera Foundation and Hashgraph has. And it's very enterprise heavy, which isn't, so when we launched, it was a very successful ETF in the US, bringing in over 100 million in AUM since we launched in October. And what most of our investors are focused on is, okay, real world assets, enterprise solutions, true functionality. And we're seeing a massive bifurcation in the previous cycles of hype and the new cycles of real world use cases. So most of our clients are looking at it from the technology stack and what's actually being built on the network. So that has been the primary focus of a lot of our conversations. Like, okay, what's being built on it? And that is the most important thing for our clients.
So I wanted you all to hear it directly from an individual representative on this panel discussion that has massive credentials working at Canary Capital, digital asset investment company, huge confirmation that we are about to enter into a real era of utility where he said himself, our clients, meaning the institutional clients that are investing in these products, these ETF wrappers, are looking at investing with the idea of what does the network do, right? What utility, what use case does it bring? And that's something that as a retail investor that has been in this space for literally going on 10 years now, we've been screaming at the top of our lungs in, utility cycle. And now we're really starting to see institutions adopt these digital assets and add them to their portfolio, with utility and use case in mind and not just speculation. So really think about that. We have never in the lifeline of crypto seen an institutional utility cycle at scale. So nobody knows what that looks like. I'm here in an attempt to show you guys that Canton Network and many others like Hedera, so on and so forth, are likely, again, in my personal opinion, based off the research I've done, going to be the ones that participate in this new digital wealth transformation. This from Centaur Research is the last post that I have for you guys. They put this out just the other day. Centaur Research said institutional crypto market structure is bifurcating. And I have a couple of different highlights from their pretty extensive read. I thought it was very enjoyable to read thoroughly through this. May 15, 2026. Definitely go and check this one out. I'm not going to read thoroughly through the entirety of this entire piece. But I do want to give you guys some highlights before we hop off today, because this is very interesting. So starting off at the very beginning of this, it says, ARC, Canton, and Tempo are becoming a useful proxy for what institutional blockchain infrastructure buyers are willing to fund. Across the three networks, disclosed or reported raises a total of $1.02 billion with a combined valuation of roughly $10 billion. That is large enough to treat the week's headlines as a capital allocation signal, not just another round of L1 branding. So it says right there, this is a capital allocation signal. This is an institutional blockchain infrastructure buyers are allocating to these networks, and Canton is listed as one of them. So I thought that that was interesting because, again, we as retail traders want to be so aligned with what institutions are doing. And this document right here from Centaur Research is telling you that out of some of the networks that institutional buyers in infrastructure are purchasing, Canton is one of those listed names. A combined 10 billion valuation base assumes that these networks convert strategic backing into live usage, not just pilots. The last point is important. The raises are not proof of product market fit. They are proof that institutional buyers, I repeat, institutional buyers want a different privacy and control service than the ones offered by default public chain infrastructure. So, this is just, again, in my personal opinion, huge confirmation that Canton is here to stay. It's going to be one of the chosen ones out of the many other, digital asset networks that provide utility, real use case, and real value to the digital asset space. And we are still in this era of indecisiveness where institutions are going to be choosing networks over the coming years. And we can speculate as much as we want as retail investors on which ones those are going to be. But it would definitely behoove us that when an institution announces that they've chosen a blockchain or a network to work with, we don't ignore that because of some married bias that previously existed, and we adapt with the changing times. At least I know that's how I'm going to approach certain things. To leave you off with this, it says in this Centaur Research report, institutional infrastructure and public DeFi venues are both moving toward the same base asset, regulated dollar liquidity. And ARC, Canton, and Tempo are trying to build environments where that dollar liquidity can support tokenized real-world workflows with privacy and compliance. So that is it for today's video breakdown. I hope that you all enjoyed part 1 and part 2 of today's video. If you did, do us that favor, smash that thumbs up button and subscribe. Remember that none of this is financial advice. We're not telling you guys to go out there and invest in any of the digital assets that we discussed in the video breakdowns, but we are showing you all sophisticated investors, large market participants, industry-leading experts tell you on stage that all of this is happening right now in real time. It's the time to buckle up. It's the time to be a part of a like-minded community that's teaching about this stuff every single day, going into the details, going into the documents, the video panel discussions that people should be mindful of, learning about the stuff, but for some odd reason aren't, because they're distracted by the masses, the mainstream media bullcrap that's out there. Tap in with us inside the private CYPRX community, teach yourself some digital skills, build this generational wealth, and grow with other like-minded individuals that are here on this earth, just like yourselves, trying to lock in and improve. With that being said, many blessings to you guys. Be cognizant, be aware out there. Hope to see you all on the inside, and I'll see you guys in the next video breakdown.